Traders on Wall Street will now have even more information at their fingertips. Bloomberg is launching 2 new hybrid indices, including a new index combining the Global Aggregate Index with components of the China Aggregate Index. They estimate the size of the index would amount to roughly $48 trillion.
China is not currently part of these indices because the currency is not really freely trading and convertible. But there will come a time, we believe, when China will be included in the Global Aggregate Index. So these indices are really important for investors because it gives them a sense of what the world will look like sometime down the road.
Bloomberg believes its new indices will create options for fund managers. And because the Global Aggregate Index remains unchanged, investors aren't pressured to commit to Chinese securities. Professor Jennifer Carpenter at NYU Stern's School of Business says having access to this new wealth of information could prove to be a big asset for traders down the road.
Just an easy way to begin to start thinking about, well, what if I started investing in China, and how is that going to improve my return risk profile, which should start to whet the appetite as well as start to build the familiarity you need for people to become comfortable, investing real money there.
While many traders remain concerned about China's interventionist economic policies, recent reforms have provided a major source of optimism.
The bus is coming. People have seen the improvements and the reforms that have been made, and they are being reflected with the announcement of these 2 new indices.
And Bloomberg says further reforms could see China being considered for inclusion in the Global Aggregate Index. Some economists here in New York believe China's inclusion could be a potential win-win. For Beijing, it could help strengthen their currency, and for investors, it's a chance to diversify and help reduce portfolio risk. William Denselow, CGTN, New York.